All right. So Bitcoin's market cap is $156 billion. It's insane, right? The total market cap of all cryptocurrencies is close to $300 billion. It just passed 200 billion. And so we're seeing Bitcoin grow exponentially. And when you go to the Bitcoin charts, you see the same thing, exponential growth. We grew this year in January, or from January 2017 till now, we grew more than we did in the past 5 years. So here on cryptocurrency market capitalization, so coinmarketcap.com, we can see lots of data about Bitcoin and basically any other altcoin we want. We can see the market cap, the volume in the past 24 hours. So when this is high volume, lots of people are active. You have to then look at whether it's a buy volume or sell volume. Then the circulating supply here is 16 million Bitcoin, lower than basically any other cryptocurrency. And we're going to have here again in 2020. So we will only get 6 instead of 12. So it will be having. That's mining rewards. So you don't really need to worry about that if you're not a miner. But the point is there will be less Bitcoin coming into existence every day. Half of as much Bitcoin. And it will be even more expensive and harder to mine. Right now it's about over $1,000 in electricity just to mine one Bitcoin. So over here on this coin market cap chart, you have your market cap, which is the blue line, and you can click whatever you want to remove or add. So we have the price in US dollar right now, but we can remove that and put the price of Bitcoin, which is 1 Bitcoin for 1 Bitcoin. Be a little bit weird if it wasn't. But you can also have the 24-hour volume or not. So if you want it to be more clean, and if you're looking at one thing in particular, like right here, the volume. So look at the volume. Look at this. It is insane how much volume we have. Because I think we had some big investors start moving their money into it. It went mainstream, basically. Even my mom came over today and she said, I don't know how it came up. She knows I own Bitcoin and stuff like that. But she said, I don't think Bitcoin's a good idea. I said, I lost some money. And she's like, oh, with Bitcoin? She is just waiting for me to lose money because she listens and watches the news. And that's what they tell her is going to happen. Because they're trying to create that reality. And like we spoke about in the last video, when you have a lot of power like that, like the couple of companies that own all the media, they are doing insider trading, which is illegal, and they're trying to lower the price of Bitcoin. We read in an article in the last video that there was a $10 million bet put on Bitcoin losing or going down, and it actually went up, and they had to buy back higher than they did the initial margin position selling for. So they sold low, bought high. And this is what would happen if we listened to mainstream media. They want us all to lose our money and keep it in the current systems because that's how they profit. they are very well at taking advantage of the current systems. Not so much these newer systems, because it's not as easy to take advantage of them. But we read in that video, we read the problem with Bitcoin price charts, speaking about the opening and closing prices and how it can confuse things, and how you should not just go off of the percent change, because it's really it really confuses things, because it's exactly 24 hours before, which is the price it goes off of, and tells you the difference in between the current price and exactly 24 hours ago. Not the high for 24 hours ago, not the close price for 24 hours ago, exactly 24 hours ago, since Bitcoin maintains a 24/7 clock. It has no real open and close. So it's a trailing price when you look at this 7%. That's 7% based off of what it was 24 hours ago. And if you want to know more about that, check out that video. We also went over an introduction to Bitcoin trading and technical charts, which spoke about candlesticks and what information is within them and how to read them. And now we're going to move on to our last two articles here and finish off our course about how to read Bitcoin price charts, because you really need to know this to succeed with trading, especially day trading. Whether you already own Bitcoin or plan to get some sooner or later, you'll want to know how much these crypto coins are worth when converted into your currency of choice. Later, you may want to know whether to hang on to your coins or sell them, hopefully making a little profit in the process. However, analyzing price charts and understanding trading terms from the financial world can be rather daunting, especially for the beginner. This guide serves as a useful primer of the basics. What is Bitcoin's current price? The best place to find out the latest price of Bitcoin, the currency symbol being BTC or XBT, is the exchange you bought them from. So it could be Bitstamp, Bitfinex, BTCE, or CoinDesk's own Bitcoin price index. Knowing Bitcoin's current price is one thing, but pretty soon you'll want to know where the prices will go in the future. So methods for predicting price trends. Forecasting price movements of anything traded at an exchange is a risky probabilities game. Nobody is right all the time. Many traders have lost lots of money, if not their life savings, into such attempts. The two main approaches to predicting price development are called fundamental analysis and technical analysis. While fundamental analysis examines the underlying forces of an economy, a company, or a security, technical analysis attempts to forecast the direction of prices based on past market data, primarily historical prices and volume found on price charts. Where to find Bitcoin price charts? To perform technical analysis on Bitcoin price and volume history, you'll need Bitcoin price charts that display data in a more readable manner than just plain number tables. Good places to start are the charts on CoinDesk's Bitcoin price index. To start with, a simple price chart. So we can have something like this chart here, but you also can have a price chart that has candlesticks, and over here we have a good one. So these are candlesticks, and lots of exchanges will have candlestick charts. Some other charts will be these ones. You get more data and can know more with the candlestick charts. So those are the ones that you will want. So it's going to talk about them now. This is a line chart, which is like the one here, and then a candlestick chart. So the most basic type of price chart displays prices as a line. Closing prices of any given period of time, a month, a week, a day, 1 hour, etc., are used to draw the price line. This kind of chart can be used to get a quick overview of what prices have been doing lately, but traders need more data to draw their conclusions. Specifically, conclusions and predicting the future price, you need to have these candlesticks. Trader's choice, the candlestick chart. The most widespread type of chart among traders is the candlestick price chart, as seen below. Candlestick charts display more data than just the closing price. Each candle shows the opening price, the lowest and highest price of the given time period, as well as the closing price. In addition, the color of the candle body indicates whether the closing price was higher than the opening price, usually a green bar called an up bar, or lower than the opening price, usually with a red body called a down bar. So an increasing bullish candlestick, the high is this line, so the wick or the top shadow. The close is the top of the candle, so the stick, the wide stick, and the open is the bottom of the candle when it's a green one, and then the low price is obviously the bottom shadow or bottom wick. And then it's opposite over here. We have obviously a decreasing bearish candlestick, but the high is the same up here, this wick or top shadow, but then the open is the top and the close is the bottom on a red candlestick or down bar. And then the low is again the bottom shadow. So memorize that for a second. So it makes sense, right? When it's opening, it's going up. When it's closing, or when it's when it's the close on the bottom, it's going down. So the open is higher than the close, and when it's going up, the open is lower than the close. So the candlestick chart belongs to the family of OHLC, open, high, low, close price charts. But there's a multitude of other chart types, styles, to suit any advanced trader's preference. Another type worth mentioning is the non-time-based, or NTB, range chart. Beginners may find them less intuitive and more difficult to grasp. However, candlestick price charts contain a lot of useful information for the skilled trader's eyes, such as whether a candle's spread is wide or narrow, illustrates the difference between high and low prices, where the closing price is relative to high and low, etc. Together with the patterns that groups of candlesticks form, this is what traders base their trend biases on, either bullish, rising prices, or bearish, falling prices, or ranging sideways. Other popular platforms with many of these features are Bitcoinity, Bitcoin Wisdom, Zero Block, and Trade Block. Now, where to go from here? Now that you've had an introduction to reading Bitcoin price charts, a good idea would be to start following Bitcoin's price development on a daily basis. You will inevitably start noticing certain regularities on the charts, most probably the trending behavior of prices. Later on, you might remember that this was the point in time where you were drawn into the art of technical price analysis. So yeah, I suggested too in the beginning, just start to follow the charts and see what you would do if you did have money in there, And if you would have made money consistently, once you start realizing that you would have won consistently, then put a bit of money in, or do it with a very small amount of money first. But everyone gets excited and anxious, and they want to put a lot of money in and win a lot of money right away. But the key is to learn and to slowly put more money in over time once you get your skills and once you know what you're doing, not just bet, because we tend to do that as beginner traders. We're betting, and that's why a lot of lending sites and other things where you're guaranteed income is, you know, quite attractive to some people, especially beginners. So trend spotting, how to identify trends in Bitcoin price charts. Trends play an important role in trading, giving traders a chance to use patterns in the price data to make decisions based on more than simple rises and falls, or worse, gut instinct. But how does one identify and draw a trend on a chart? When looking at Bitcoin price charts like the one below, you can't help notice how prices at times seem to move along invisible lines. So this time it's going down, this following roughly this visible line of a down trend and this invisible line of an uptrend. Then again, this invisible line going down and up. And these are indicators as well. And you'll be having to draw these lines yourself once you start trying to predict future patterns. This can be seen whichever chart time frame you look at, be it weekly, daily, or on a 30-minute chart. So this is when the chart might be measured. So a lot of times, I'll show you now, actually. A lot of times you can change this right here. It's set to 1 hour. And so you can also make it more precise and put it to 1 minute. So it shows you price differences by the minute, right? So this is 1 minute. Each candlestick is a minute. And each line is a minute. You know, each measurement. So we can also go to 5 minutes, an hour, where it will give you an average over that hour. So it's less precise, but you can see they're saying, so if we go back, so we're halfway through this month here. So going back a couple weeks, we can see this line going up, down, up, down, up. And this is seen even when you go to a different measurement, like a week measurement. You can see again. So now each measurement is a week. Each one of these is a week, right? So you can see again, it's going up, down, up, down, up. And so no matter what type of measurement, how precise we look at these ups and downs, however we measure them, we still see those lines. So that's what they're showing us here. They're measuring it one way here. So you see the 22nd, May 14th, June 14th. So we have a month in between there, and we have so we probably have this in weeks, or if not, actually we probably have this one in days, and then this one we see February, March, April, May. This one's in weeks. So you see the same thing with weeks. I don't think these are the exact same, no, they're not the exact same time frames. So it's not the same ups and downs, but they're just showing you that you can see them, two totally different charts. These aren't related to each other, these charts, but they're still showing you one is measured in weeks, one is measured in days, and you still see those lines. So, oh, I was right. Daily chart, weekly chart, and this is the 30-minute chart. Very precise. So it's showing you a candlestick, a measurement for every 30 minutes. And you see those lines again. Trend lines and trend channels. The lines you see in the charts above are called trend lines. However, it is apparent that prices not only follow trend lines, they often move back and forth between two trend lines, an upper and a lower trend line. So here's the upper trend line. When you measure it, so this is the lower trend line, right? And this is the upper trend line. And if you measure them both, it's going up over time. But it has these ups and downs, but it'll have 2 steps up, 1 step down, 2 steps up, 1 step down. And you always see that that it follows this line. So see this high, this past high will be basically the measurement for this next dip's low, and the high will be a bit higher than this high, but the low will be the last high, the last spike's high. So let's see how they explain this. This is then called a trend channel, and it's probably one of the most widely used concepts in technical price analysis. One important aspect of trends is that they can be divided into shorter trend segments, which again are made of 7 shorter segments. So it's an upper and lower line, but then you can divide it into sections just like this one. You could divide it, you could draw a line here, a line down, a line up, a line down. They're doing that here, showing you the ups and down lines. Price trends are highly factual in nature. This means that they appear very similar no matter on what time frame, i.e. zoom factor, you look at them. Price trends are highly fractal. So the trends are fractal. They split off. If you look at lower fractions, it's the same as the bigger fractions, and so on. How to draw trend lines, and channels. It's fairly easy to draw trends. All you need is an interactive charting platform that allows you to draw on the charts, such as Coinstacker's Bitcoin charts or Zero Block. For example, using the line or channel tools, do the following. Uptrend lines, drawing uptrend lines. Uptrends generally respect the lower supporting trend line more accurately. So start the trend line at one of the trend's lows. So they respect the lower supporting trend line more accurately. So start your trend line with one of the trend's lows. So the lowest low you can see in that trend. Then draw the line to one of the next higher lows. So they're going all the way up to this high low as well. So they're going below these lows, and then they draw it until it reaches the high of one of the lows. If this high is lower than this trend line, that means you're going down. It's getting ready to go down. And this is where it starts to get magical, and the tricks and the keys are hidden. Depending on the tool used, the line will automatically extend to the right and or left. So if you draw up to this one, I guess they drew to this higher low, it automatically extended. And so he did not draw it up to this. It just naturally, when it started dropping, this high was below the low, and that's a good initial sign that we're getting ready to go down. Note how the blue moving average indicator on the chart can help you draw the line at a good angle. After drawing the line, you will almost always need to move it around a bit and adjust its angle so it touches the trend's price lows as accurately as possible. Trend lines never perfectly fit prices, however. There will always be some price candles piercing through. Like this one piercing through. Now when you're drawing downtrends are drawn exactly like uptrends, only that you start with the upper resisting trend line. So you start up here with this upper resisting meaning the highest point that has resistance to go up any higher. It had resistance. So you draw from there, you start from there, and then you would go down to this trend line, but they're saying you sometimes have to adjust it. So maybe the trend line is actually here, but it's when you see this other data, you can see that this was the downtrend line, and then it started going up, right? So this isn't part of the downtrend. This is a further uptrend. And you could probably try to draw the line from here to here, and then here to here, and then but try to make it as general as possible. Advanced tip: logarithmic charts. Exponential growth can often be seen in price charts, as shown by Bitcoin's rally back in October and November 2016. Exponential curves display as straight lines when plotted on an logarithmic scale. The same price series then looks like this. Now, trend channels can be used to easily spot exponential growth. However, not all charting platforms offer logarithmic charts. So you have this exponential growth, exponential curve, So these exponential lines they have here, right? It's showing you that it's going up exponentially. So that it can fit this whole chart in there. It goes up exponentially, meaning that this is one measurement, and then up here it's this small piece is one of those same measurements. Now trend channels can be used easily to spot exponential growth. However, not all charting platforms offer them using trends in trading. While trends can be useful, it is not advised to use them as the only factor in any entry decision. Even if prices touch the lower trend line of an uptrend and buying into Bitcoin seems to make perfect sense, always look for more confirmation from other indicators. Example, other support and resistance key levels, volume analysis, price action patterns. That this trend is not going to break and losing you money. Ideally, you want to have confluence of more than one indicator to increase the odds in favor of a profitable trade. Furthermore, you don't forget to always look for higher and lower time frame trends. While it may seem like prices are in an uptrend on one time frame, higher time frames may reveal prices are actually in a downtrend, for instance. Many traders are not comfortable trading against the trend, which is why they'd rather trade true to the motto, the trend is your friend. So have all the trends in favor before you make a trade. And we'll do a review of this. It's a lot of reading, and we'll do a review just to get those main points in there and maybe show you in practice a couple times with some live streams. We'll put this into practice. So over here on Bitfinex, we can actually draw some lines. So we have these tools over here, and we have the ability to draw lines. And this one's automatically extended for us. And see, this one has that trend line in it. So if we wanted to use it over here, we might be able to do something. Wow, look at that. So there's a lot of tools you can use. We'll have to look into this pitchfork tool here, but I don't know too much about that one. But yes, if we draw these lines here, and then we were supposed to start with the bottom, so we're supposed to start over here with this one here. You start with the bottom price trend, and you hit another. Then we could go from here that's our line right there. So and we have all sorts of other tools and whatnot, you can remove by doing this, and then we'll redraw our so this one maybe could have went so we would actually go something like this. Right, and then we'd go do another one right here, and right here. And so on and so forth. So we're going to practice this. I suggest you do the same. Maybe rewatch the video and practice this as you go. And in about a week or so, we will share another video on what else we've learned with sharing our experiences with these markets and how to read these charts, because you can't do it the same way teaching yourself. You kind of have to learn the process that's being used, and it's successful in the process that works and has worked for decades. So people have learned a lot, and you can utilize that knowledge. The only other option other than learning this is having a bot that knows all this stuff and trades for you. So I'm over here on IdeaCoin, which was a successful ICO we participated in, and they sold all 10 million of their IdeaCoin. It's a lending platform. It has staking and things like that, mining, staking. So they're saying to follow news on the Telegram channel and their website, and their next roadmap stage will be lending and internal exchange in December. So watch for that, and we'll let you know as soon as it's open for business. And it's going to be an amazing opportunity to get into something like BitConnect, but get into it early, because you're the most successful at these types of platforms when you're one of the early people. You get the most payouts, and then as time goes on, there's not any new customers. Everybody that's interested in doing this has been recruited and is already investing, so that the payouts get smaller with time. So it's really ideal to get in the beginning, and if you are late getting in BitConnect, then you can get in on IdeaCoin. But if you still do want to get into BitConnect, you can find our link for that in the description below. And we're just using our strategy right now, being investing and then transferring all of our profits back into our wallet until we... This is the safe way to do the BitConnect platform. So we remove all of our profits until we make our initial investment back, and then we just invest with our profits eventually and keep profiting off our profits. And the downfall to this is you do not get that compounding investment early, and and start making those big bucks. So you don't make as much this way, but it is the safer way to do it when you've seen platforms run off with people's money, and then this one, locking your money in for, you know, a year. It's a long time when you need that money, or when that, you know, because everyone that has a little bit of money laying around, they had to sacrifice something for that money, and you know, they could use it. And having it locked in these platforms kind of defeats the purpose of making money with it. You know, it kind of just makes you think they're just trying to get your money. So we're going to take our money out and then just ask them for profits. Basically, you know, we gave you our money for that year, now pay us. But we will get our profits will break even about three months. We'll break even. And this this account was I just did this $1,000 loan about maybe a month ago now, so not very long ago. But I do have another account where we invested a few months ago, and we've almost, well, probably 2 months ago, maybe a little bit more, and we've almost made our money back with that one. And then we did this. Again, if you want to sign up for this, I will give you 5% of your initial investment back right away if you join our team. So what I get for you joining my team is 7% of your investment, and I'll give 5% of that back. If you want to only do that on your first investment, I'll give you the whole commission back. But I'll keep giving you 5% of every investment. So I'm going to transfer this over to my BitConnect wallet. We have done some research, and we have those videos on our channel that they're making about 10 to 20 times what you're making just by the price of BitConnect going up, and them holding your BitConnect and giving you US dollar credit, meaning your value does not go up with time because you're stuck into US dollars that doesn't go up. BitConnect coin has been going up like crazy, from 70 cents to $300 in less than a year. And they profit from all of that, and that's how they help. That's what helps them pay people out. So we've done the research and figured out you can make more money even just holding your BitConnect. And then on top of that, if you stake it, you know, that's where what they don't tell you, the people that are smart are doing that. And you can do a lot with your BitConnect coin. ICOs, you can make you know, a couple hundred times your money in a couple months, but they're more risky. You know, you're not guaranteed. But with this, you make about 3 times your money in a year, but you have to lock your money in for a year. You could do that with an ICO in a month, but that's your choice. We're going to also try out IdeaCoin, and hopefully this platform is more profitable. We'll do a little bit of a comparison. But that's all for today, guys. You know, we're just sharing this journey with you, and hope you can come along for the ride. See you later. Peace.